Hey guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury. Welcome to today's daily recap. It is Thursday, April 15th, 2021. I hope you guys had a wonderful week so far in trading. I know today the market feels a little heavy and I definitely want to talk about it. Before I do so, if you're new to this channel, the way that these videos work is we basically recap some of the stocks that we cover on this channel every Sunday. We sort of do an update video on some of the stocks that we're covering, and then we just do a daily recap to see how the stocks are performing compared to our thesis. And then we also talk about tips and tricks and in general some other symbols that might be trading. I have a couple announcements that I wanted to do. The first thing I noticed that is in sort of doing these videos, I've noticed a lot of the charts that I use typically refer to in the video will be the daily chart here, and it has a lot of different types of indicators, and then of course the 15-minute chart to kind of indicate. And I realize for a lot of you guys who might be swing trading, maybe long-term traders, a lot of this might be sort of not a day trading, might not be of interest to you. And so we could still talk about day trading, we can still refer to these charts. But the first thing I wanted to talk about was I'm going to start focusing more on the daily candles and the weekly candles, and we could also look at the the minute, but I want to focus on one chart and not have so many necessarily indicators that might confuse people, or maybe they can't see bigger picture items. I feel like if we focus more on the daily candle and just focus on that, we can actually understand a lot more about what's going on with the price action compared to just sort of having my sort of day trading chart, which has just a ton of stuff that might not apply. And so the first thing I want to do is I want to change that back to just doing the daily. And the second thing is, you may notice that behind the scenes, guys, I do really want to make this content valuable for you. I always do ask you guys, if you do like the video, to hit the like and subscribe to this channel, because we are a 100% free content channel, which something that I like to give back to communities. And so one of the things I always like to do is try to improve things. And so if there's questions, comments, things like that you'd like to see, if you like to see that move that we're going to start today, which is focusing on the one chart pattern, let me know. Just let me know, like, yeah, I think that it's a lot cleaner, or I appreciate anything. You may also know we did update our profile pic and had a little fancy bull in a suit. And so obviously, as being an entrepreneur and also being a bull, I thought that we put that two together. So tell me what you think about the new profile pic. And so with that said, guys, let's just jump right into it. And so let's just jump in with Apple. And so what I want to do is I'm going to focus again on the daily chart. And so each of these candles represents a day in Apple. And so one of the technical indicators I have is I have this sort of 200-day average, I have the 20-day average in blue, and I have the 50-day average. Okay, and that's no different than what I had on my other screen. Okay, so with orange I indicate the 200-day, I indicate the 50-day, and I indicate the 20-day, and then I have the regression line. Okay, and so one of the things I mentioned, and we talked about this, was that there was this top at 127.50 in Apple, and we broke that recently. And now you can see we have some consolidation here, and we essentially have an upward resistance level at 135. And I also mentioned to you guys that if I were to dip by Apple, right, I wouldn't want to be adding to a position at the highs here unless I'm day trading. I would want to wait for this dip. And so this is still the same thesis, guys, is I would look for a buy potentially around here at the 127.50 range, which I mentioned. You can see now that the 50-day is starting to flatten up. You're going to start to see that it's just going to start to curl back up, and you can see that the 20-day is coming back up. And so this is the level that we broke that I would want to buy at if I were to adding a position to Apple. Okay, now if you were to look at a longer term, you can see that Apple's clearly uptrending. Okay, and so I do these weekly charts usually on the Sunday videos, just to kind of show you guys still that I feel the heaviness of the market. I understand some of us get stuck in positions, but you can still see that Apple's clearly still uptrending. Okay, and so we had this top here at 145, which we talked about, was when the Apple car news came out around here. And then recently you can see that with the market correction, there was plenty of buying opportunities, 117.80. And so anything really outside this channel on the bottom here is a good buy zone. Okay, and so that Apple continues to be a strong stock, but again, I wouldn't be adding to a long position necessarily at these levels. I'd be selling my long positions, because again, going back to what we talk about, if you're buying here, why not sell your shares here, cash out, and then start adding to a position at a discount? Okay, and so that's what I would expect with Apple. The next stock would be Tesla. And so for Tesla, it's no different. Solid stock. We call this, I think, to the T, guys. We really did. So we mentioned the same play here, is that we had a top here at 710, 715. And we saw that break a couple days ago, and we had a really strong day. And we mentioned in our last recap video from Tuesday that, you know, we hit 663, and we mentioned in previous videos that our short-term price target was 775 for Tesla, and it actually hit 775, and it actually went up to 786 in the pre-market. And then I knew, you know, it felt heavy, and it looked really good for just a fader. And so if you were able to get in 780, 85, 86 in the pre-market, I mean, guys, this went down to the low here was 728. And so when you want to talk about really good returns, if you want to talk about trusting the trade, guys, you know, 50 points in a day trade if you're a short position on Tesla, I mean, that to me is just a killer trade. And if you were able to add to your positions on these higher lows, right? We talked about the higher high, the higher lows, okay? And now you can see we clearly have a higher high. And so one of the first things I mentioned to you guys was don't add to a long position. And so even yesterday, you could have technically added at 728, but really we talked about right here, right? The 7.5, the 7.10, the 7.15 up to 7.20 range to add a position. Well, it turns out today we got down to 7.21, okay? And so you could add a light, you know, share size, whatever you're comfortable with. But guys, you can see that there's these opportunities here where you can add at the 7.10, 7.15, 7.20 where it retraced, where it broke out, and add that for the dip buy. And keep in mind, guys, they do have earnings coming out in a couple weeks, okay? And same idea here, guys. Clearly, Tesla is uptrending, and so you can see here, perfect buy zone, right? We didn't get close, anywhere close at that time to the 200-day average. But, you know, essentially, you know, actually I should show that on the daily chart. We never got close to the 200-day average when we had that sort of tank. But, you know, there's just clearly a higher low. And so I would have probably bought here when we found that this candle was reversing. And I mentioned too, you know, if you were buying at 580 and you sold at 763, guys, I mean, that's a major 25-30% return in a matter of, you know, not even a month, really. It's 2 weeks. Okay. So with that said, guys, again, I'd be looking at dip buy at 720, which came today, and I'd still be looking at holding through earnings, and I expect some solid earnings and definitely retesting some of these highs at 900. And so definitely this would be a strong area of resistance. You can see there's a lot of consolidation in this area, and so I expect strong resistance in the 900 range. Okay. Palantir, we had the double click day yesterday, announced some new contracts. You know, the stock continues to look weak. I did compare it and added our friend Spce to it as well. Both these stocks had this massive sort of run up. So what I could do is I could add the price scale of another stock and overlay it. And so if you look here in the orange, that is Spce. And you can see that a lot of these stocks just, you know, they had this massive sort of gap up, and they ran in February. And then, you know, when the whole GameStop was going on, and now they've sort of cooled off, and a lot of people are bag holding. And you can see I've mentioned before that there's this sort of gap fill here at 31.44. So I mentioned this was sort of my near-term price target, but the event really did nothing. We had a really good sort of resistance. You can see here right off the bat we went up to 26.20, and you can see that perfectly bounce off the 50-day. And so we mentioned, you know, when a stock is still technically bearish, it's going to be trading below the 50-day, and now the 50-day is resistance for the stock. And so it hit that in the mornings, totally sold off, and now it looks like we're trading right below the 20-day. And so, you know, Palantir again continues to look weak. You can see it's downtrending on the daily chart, but again, going back to the long-term idea of Palantir, guys, is it's still holding up key levels. Okay, and so we're still holding up, but we have a lot of these stocks with insiders selling, and that's not helping the cause. When you find out that an owner or CEO or founder is selling shares, and especially with Palantir, you had the lockout period that released a bunch of shares, and it really, you could tell, you know, it never really recovered. And so you had all this volume, and it's just never really been able to bounce. And this 2750, you know, when we get back up there, expect, you know, a similar thing like Apple, where when you'll get it and then you'll retest, you'll fail, but then you'll break out. And the same thing here, right? As we had this 2750, we try to get back 2620, we failed, but the next time expect a breakout. And so I'm still bullish on the stock, guys. It's just one of those things where just make sure you're selling calls. At least you're making some money while you're waiting for this thing to fill up and get through, and let all this sort of, you know, get ironed out. So just be patient, but our levels are holding. You know, the 2750 has been a strong resistance, and, you know, back down here at the 21 level, you know, so a lot of the higher lows, higher highs on some of these doesn't apply anymore, and so, you know, unfortunately it's just sideways consolidation for a lot of these stocks. And Clover is no different. We had a great catalyst. We mentioned that this was probably the engulfing candle, and it was a reversal, and you can see it engulfed the previous like really like 20 candles. This major candle with major volume really was able to push up the stock, and unfortunately, we just got a fade. It just faded off from that level, and so it was trading here at this level around 730, and we ended up getting right back to that level. And so it's unfortunate because that news was really good, and hopefully what it'll do is it'll reflect eventually in an earnings report. But you can see that on low volume we're just selling off, and so the buyers are in this trade. I still feel like they're in this trade. I feel like we have a great bottom here that we're forming. It is a cheaper stock, and so the risk is definitely a lot less compared to when if you're buying up here at the high teens. And so again, I look for a reversal. Definitely, you can see that the 200 days up here at 11, and so I think that it's a steal if you're getting in around $6-7, and just ride the momentum, especially when we get back up here above the 50-day. And I mentioned to you guys, still my game plan is to get back up here into this consolidation range around $10.50. And so I actually held on to my shares through this, but obviously there was a great selling opportunity. But like I mentioned on this channel, I'm out of my word, and I'm gonna stick to what I said I was gonna do, which is sell right up here. Okay. SPCE guys, Richard Branson sold about 150 million shares. He's the founder, or one of the owners, the founders of the company. And it's not a big of a deal. He's still the biggest shareholder, so it's not like he's selling his entire stake, and there should be a lot of red flags. But what's really interesting about this move is I had mentioned that we had a really good, strong 200-day support and consolidation here, and we broke that today. And so now we're really just kind of out here. And I was looking at previous daily candles, and you can see that we're just breaking a lot of these supports. And so we had some consolidation back here in late December, early January, before we really started to take off. But look at the volume. And so it's just a lot of people worried, like, why would he sell shares? And I don't think it's a big deal. As long as he's still the largest shareholder, he's just going to use that money to fund one of his other companies, one of his other brands. And so founders can sell. It's when they sell a lot of their shares, or majority of their shares, that you should be worried. Okay. And so it's trading behind all the major averages, and so I think it's complete steal. And I think don't be surprised when this gets right back into this channel here, and we're trading in the high 20s in the next couple weeks. Okay. And so it's a good steal. You could add to your position. I added to my long actually yesterday, right here at the 200-day. Did not expect that we were going to get a flush, but the news just came out, and again, the market's unpredictable. And so this whole idea that we made a higher high or a higher low is completely gone. As you can see, guys, we actually made a lower high and a lower low. Okay. And so at this point, the stock is definitely on the bearish side. And again, if you can get in at a discount price, keep in mind this was a stock that went all the way up to like $60. Okay. Not saying that it should be, but we can definitely see that there were some levels here in the 40s that it held well. And again, it actually held and consolidated up in the 50s as well. Okay. And so again, just catalyst. This is a catalyst driven, stock. And so anything that, last time this went up like this was with Kathy Wood, buying shares with her, or potentially adding shares with her ARK investing. The last stock we'll cover is AI. AI finally came up with that catalyst. We talked about it last week that we saw DoorDash, which IPO'd at the same time. And I'll just add that for you guys who didn't watch that video. What we did is we saw this price action. Okay. And we saw that, okay, the IPOs hit, essentially a similar top, and then they just faded down. And then recently DoorDash picked up when they announced that catalyst with the banks, the 10 banks that put offers, essentially to team up with them to do the rewards program. And I mentioned that, if you look at AI, it's just been flat. There's been no volume, and you could tell it felt very heavy yesterday. And we got up as high, I believe it was 74. As high as like 70, yeah, right over under $74. And so we had a major catalyst. They got a new contract. Now they're in Japan. And so today is some profit taking, which is fine. But definitely there's a good base here at $58, $59. And so now we're starting to base the stock. If you guys look at sort of, let me go ahead and take this off. If you guys take a look at just sort of the picture before, as you can see that we were essentially just coming downfall. We were consolidating and coming down. Now we've actually consolidated, come up, come down, retested that, consolidated, and actually went right back up. Okay, so now we have sort of a base where before we were essentially just coming down. Okay, so we have a base here at $60. And so what I like to see obviously is a reversal and at least a test going up to this 50-day. And so just patience, and again, just over time, more contracts that they're going to grow. They have a ton of income. I think it was like 50, $60 million And so they have a lot of, contracts, and as they grow, they're going to get more of that money, and hopefully the company will be worth a lot more than where it's at now, which is way below IPO. But again, guys, the danger of IPOs. Let's look at Posh. You want to complain about, AI. I mean, look at Posh, comes out at $100 and it's trading at $40. Okay, and so that's, Posh is nowhere near what what AI is doing. Okay, so that's it, guys. As always, appreciate your support. Please don't forget to hit that like and subscribe button, and as always, guys, I will see you tomorrow. Bye bye.